Right guys, so here we go for our first market analysis video. These reviews will be much more informal than the educational videos and will be released on an ad hoc basis, i.e. I won't be putting out videos every few days periodically if unnecessary to do so, but videos will be released as and when market conditions have changed to a degree significant enough to warrant a new review, and at those times I'll put out charts to show you guys my views on the situation at hand, look at levels of interest, and of course give my directional bias if applicable. I'm sure this will take form in its own way, but the overall style to start will be taking a look at equities, namely ES and NQ, and then DXY before moving on to BTC, ETH, and any alts of interest. This is the first video of many, and I'm completely and wholly open to suggestions. This first will be more of a freestyle, but please do comment if you like the style of recording, if you have any suggestions for improvement and or future content you'd like to see. And if it's within my remit, I'll of course do my best to provide you with it. So let's take a look at ES to start. We start our top-down analysis here. As I'm sure most of you know, the crypto markets have long passed their periods of infancy as newly emerging asset classes and have matured now to a degree where they assume a high correlation with equities. So to gauge this correlated knock-on effect and its implications, we start by looking at the E-mini S&P and Nasdaq, or ES and NQ. Here we start with the weekly. For those that don't know, these horizontal levels denote higher time frame levels, in this case daily and monthly, daily in orange and monthly in red. If you're a bit lost here, please check my first video in the technical analysis series on support and resistance, as that will help you see how and why I draw these levels. So to start, let's cover the basics, and that we are currently in a macro downtrend, and we can see that clearly from the weekly market structure, okay? We have the top or the high, then the low, lower high, lower low, lower high once again, lower low once again, and now we're coming up into areas of interest that we would expect to see the next lower high formation take place. We are also coming into these daily levels here and here, as well as the trend line that's been capping price to the upside so effectively over the past year. So for the weekly, it's nice and simple. Our analysis is always straight cut, and as explained in previous videos, we adopt a fact over thought approach when viewing the markets, and on that basis we see resistance and we assume resistance. We do not, on the other hand, see resistance and expect the breakout. We're aware that it's approaching a point of potential breakout and keep this awareness at hand, but we must assume based on the chart alone, being in a macro downtrend with higher time frame bearish market structure, coming into both horizontal and diagonal resistance, that we expect the next swing high to be formed as the market structure's next lower high. Now, we're talking from a chartist perspective alone here. We aren't even bringing in the macroeconomic perspective. And we aren't, for the reason that I want to keep these reviews as simple as possible for the time being as we start up, and show you that purely from a TA perspective, this is a macro downtrending asset class and we should approach it accordingly. A quick zoom down to the daily, and we can see that weekly bearish market structure a little more clearly. Now, I want to leave it there for the time being, as we are only looking at equities as supplementary information to keep in hand as context for our primary concern being the crypto markets. A quick look at NQ on the weekly, and we can see the same formation in play. And now that we have the higher time frame picture of equities in the back of our minds, let's move on to DXY. So starting on the daily, we can see that price has been within a parabolic ascent, as I'm sure most of you are aware, and price has then corrected and we are sat at a market structure defense zone, i.e. this is where you want to see the bulls step in to defend bullish market structure. Now, honing into the 4 hour, and we have an interesting picture. We can see that there was a clean bull div that formed at the lows here. So RSI and the AO both made higher lows, while price made a lower low. That said, we've now breached past some 4 hour support levels, so although we have the bull div, there's still some work to be done, and we would need to see the upper 109.6 level reclaimed to give further confidence in upside. Now that we have an image of both equities and the dollar in our minds, we can move on to Bitcoin, and I encourage you to follow these steps in analysis when looking at the crypto markets yourself. And I don't want you to overcrowd your thought process by any means. but if you haven't already, you need to start getting used to keeping these markets in your mind. And if you don't know already, crypto assumes a positive correlation with equities, meaning they move in harmony, and crypto assumes a negative correlation to the dollar, meaning they move opposingly. Now, as a first review, our crypto analysis will be extremely basic. Why? Well, because it should be. To summarize, we've just experienced a 27% move to the downside following the FTX news and are currently range bound. Now, for those that have watched my video on ranges, you'll know that generally speaking, we shouldn't be looking to tackle trades mid-range. This, of course, changes if you're an active scalper, but for most of you, the best play right now is to see how price action unfolds, plan ahead of time, set yourself up for trades in anticipation, measure your allocated risk in advance, and ensure you're ready to capitalize on future opportunity in a better position for entry with higher directional conviction. No matter what anyone tells you, you must understand that patience is a position. There's no point taking a bunch of trades mid-range out of boredom only to get chopped up. Instead, assume a stance of capital preservation and focus your thoughts on the opportunity to come. Zooming into the 30-minute, we can see the range in more detail. Ignore the red lines, those are monthly levels, but this range here is now our bread and butter, and its extremities should be our sole focus. So what are we looking for? Well, ideally we see either side swept or deviated for a high conviction play in the opposing direction. This is a clear and well-formed range that's now been in play for over a week, so we need to start thinking ahead and planning forward for a sweep of the range highs or range lows. We can then take it a step further and work out what that trade would look like, what our likely entry would be, and then think about how much we'd be willing to assign to either scenario. Would we assign more to a short, for instance, as it's going with the trend, or are we happy to assign the same to either, as our long would give us higher reward if taken for the same distance? For those unsure what I mean, I'm talking about relative percentages, okay? You can see here that if we were to long the range lows and take it to the range high, the move would be 16.7%, whereas if we were to short the range highs and take this to the range low, this move would be 14.3%. Apologies if I'm stating the blindingly obvious here, but I want to clarify this for our newer viewers, as it should always be an integral part of the decision-making process. Again, at the risk of being overly obvious, what I mean by a sweep of the highs or lows is as such. So this would be a sweep of the highs here, and this would be a sweep of the lows here. Okay? If you are a trader that likes taking simple touches to the range high or low area, feel free to. It's just not my style unless it lines up with a clear supply or demand zone or an order block. Now, talking of order blocks, you can see that whilst we've been going through this range, I have a green zone marked in the upper region of the range. This may and only may be an exception for me to take a mid-range trade, as we can see that we have a nice 30-minute order block. Why do I like this candle? Well, it's the reaction that followed after. Again, go back through my videos to learn more on order blocks. And we can also see that it lines up nicely with the high that's been formed over here. So in this case, we'd be looking for a trade bolstered with confluence as always. And in this case, it would be a sweep of the highs into a 30-minute order block, and hopefully with either high delta, a lower time frame divergence, or both. Now onto Ethereum on the 4-hour. It's a similar picture, and although we do have price sitting at the support level here, which is interesting, we still have to remember we are mid-range. So if you want to take a simple SR flip play here, be my guest, but I would personally like to operate away from the mid-range and with higher levels of confluence, which, as we know from previous videos, gives us confidence, size, and ultimately benefits our P&Ls. The 30-minute again gives us a bit more detail. We can see that bounce nicely at the EQ here, but of course still mid-range. So again, largely as the same with BTC. I'm waiting for the range highs and lows for reactions and monitoring the situation once we approach those levels. For those interested, this upper blue zone is the 4-hour breaker that capped the recent bounce from the lows. So we're either looking for the highs to be taken into this zone once again, or we break down towards the lows. Now, as I'm sure many of you have noticed, my eyes are on sweeps or deviations. It goes without saying that breaks past the range highs or lows, and with price showing intent to carry on, we flip our bias towards continuation plays to the upside or downside respectively. But once fresh ranges are created within this period of length, our first point of attention should be towards a sweep either side, as this is how price tends to behave. But of course, make sure you have plans in place for either scenario, as we should always try and be in the business of reactive versus predictive. And although we may have our assumptions of what may or may not happen, we must always plan ahead for multiple scenarios, let price action unfold, and execute in a calm, risk-managed approach that's been planned well in advance. Right guys, that's it for today. I thought I'd keep this first review short and sweet. Please support the channel by liking and subscribing, and as this is the first of this format, would appreciate any feedback and requests for future content.